For some, money and prestige on Wall Street are easy to come and easy to go. No one would know this better than Bill Hwang, one of the greatest stock traders that no one had even heard of. He was a billionaire, a philanthropist, a devout Christian, and a criminal. Hwang was, in one word, unconventional. Riding in his modest Hyundai, delivering trading advice with his God-fearing heart in his sleeve, and investing in stocks in a rash, secretive, risky manner. Bill Hwang was not your typical billionaire stock trader. He did not play by the rules. He was perplexing, strange, and eccentric. He was not known by many, and of the few that knew him, some might have been impressed, but most were confused. Would his wealth last, people would wonder, or would it go down in flames as one of the biggest financial disasters of Wall Street history? Was he a genius or was he a fool? Eventually, their questions were answered. March 2021. This was when Hwang saw what it was truly like to watch $20 billion burn to the ground in 2 days. No longer was he a game changer in Wall Street stock trading. All he was a white-collar criminal. Bill Hwang had a humble beginning. Born to a middle-class family in Korea, in 1982, Hwang migrated to the USA. He was 18. Fate seemed to be working against him. He lost his father. He struggled to learn English. He had little money, but Hwang had his wits, and that was all he needed. After graduating with an MBA from Carnegie Mellon University, Hwang turned to New York with big dreams in his eyes, and they would soon come true. In 1996, he began working as an analyst for Tiger Management, a firm led by Julian Robertson, a titan in the stock industry. Robertson encouraged Hwang to start his own hedge fund. Everything Robert touched turned to gold. So Hwang started Tiger Asia and became a member of the coveted Tiger Cubs Club, an informal collection of individuals who used to work for Robertson and then started their own mega successful firms. By 2011, he had $8 billion in assets and a 40% annual return. Well, that was all before it shut down. In 2012, Tiger Asia faced claims of illegal business dealings, and Hwang pled guilty to wire fraud. He had to pay $45 million to settle allegations of insider trading and close the company. But the chapter did not end. Hwang turned Tiger Asia into a family office and named it Archegos Capital Management in 2013. He tried to turn over a new leaf, but some demons are hard to shake. Wall Street decided to give Hwang a second chance, and for the first few years, just like before, things were going great for him. To the small circle that knew him, Hwang was on the road to redemption. Through Archegos, Hwang invested in a few select companies with money borrowed from banks. Investing with borrowed money is a huge gamble. Was Hwang in it for the long haul? And what were the banks thinking when they lent funds to Archegos? His investment strategy raised some eyebrows, but perhaps a little too late. You see, Hwang was investing in companies and trading stocks like it was no big deal, but the money he invested was loaned by banks. At one point, he had almost 9 banks funding his reckless investment portfolio and had gained leverage of almost 1,000%. Leverage is a key concept to understand. Here's how it works. Bill Hwang borrowed a fixed amount from each bank. This amount was an absolute value and was not contingent upon changes in stock prices. He then invested that borrowed amount as well as a portion of his own money into the stocks. If the stocks went up, Hwang would only owe the banks the original amount he had borrowed. The rest was for him to keep. This is called gaining leverage, and Hwang had almost 1,000% leverage. The returns Hwang reaped from the stocks were not invested back into the stocks. He stashed his returns away and simply kept on borrowing more money. Hwang believed that through his company, he was bringing fair prices to stocks. This, he insisted, was important to God. His hedge fund was, in fact, advancing society and doing the work God wanted. But he was also a master of dancing around serious criminal activity. Hwang knew when to swerve US laws and regulations. US rules prevent investors from buying securities if more than 50% of the capital invested is borrowed. But this rule did not apply to family offices, and this is what kept Archegos safe. In the fourth quarter of 2020, Hwang was on the rise. His positions exceeded $10 billion in Baidu Inc. and Tencent Music Entertainment, and up to $20 billion in Viacoms. Hwang's net worth was north of $30 billion, and he seemed to be quietly making his way to the top of the world's wealthiest people, and no one knew that Archegos Archegos was a major shareholder in public stocks. But why had no one heard of him? Well, he had used a principle called swaps. Swaps allowed Hwang to place his investments not under Archegos' name, but under the names of the banks that financed him. This cloaked Archegos and kept it under the radar, and its trading record obscure. Even the banks working with him were kept in the dark. They didn't know which other banks were also doing deals with him, and they couldn't recognize each other as co-financiers of Archegos. Hwang's stock history left no trails. He kept his head down. Quietly, he dealt his hand. At the end of each trading day, the stock value was assessed. If the total value in each of the bank's swap accounts with Archegos rose, the banks paid the difference to Archegos. If the value fell, Archegos would put up more collateral, and no one caught a whiff of his dealings. Little did he know, good times never last for him. His actions finally caught up to him on one fateful day in March 2021. Archegos' fall was as swift as its rise. Even the best laid of plans could turn to ash if you don't play your cards right. This is exactly what happened with Archegos. Wednesday, March 24th, 2021, that is when the first domino went down. Archegos had heavily invested in an entertainment company, Viacom CBS. Viacom's stock fell by 30%. Archegos' banks panicked. They demanded that Hwang liquidate the company assets to fund collateral, but the funds fell short. Thursday, March 25th, 2021, Hwang scrambled. He tried to convince the banks to let him keep the stocks in hopes that the price would bounce back. Some banks caught the warning signs and began selling their stocks to avoid losses. But here was the problem. If one bank sold its stocks, every other bank suffered. Friday, March 26th, 2021, Archegos defaulted. The glorious short-lived power of Archegos came to its bitter end. The banks split their losses and carried on, with the aggregate $10 billion loss heavy on their minds. Hwang could not bounce back from it. He had lost $20 billion within 2 days. As it turned out, the friendly, God-fearing billionaire had a couple of skeletons deep in his closet. Left with nothing in his hands except the consequences of his actions, Bill Hwang faces 11 criminal charges, including market manipulation, fraud, and racketeering, which could add up to a sentence of more than 300 years. Right now, he's been released on a $300 million bond and has agreed to surrender his passport and his freedom to travel anywhere outside the USA. Can he escape from his crimes? Highly unlikely, especially when Archegos head trader William Tomita and chief risk officer Scott Becker both pled guilty to their crimes. Bill Hwang is trapped. Bill Hwang's story shows that risky investments make money a fickle thing, easy to come, even easier to leave. Perhaps no one in modern history has lost an amount as gigantic as $20 billion in a span of 48 hours. His story is unprecedented. It gives a loud and clear message to other firms. You play stupid games, you win stupid prizes.